Hey, Raul Balufa here. In this video, I'm going to talk about why the real estate market is not crashing, it's actually going up, and how you can get involved with just $17,500 and be in on that action in this crazy rising real estate market. We're going to go over what are the real trends that are explaining that things are going up and what not to look at and how you can get involved ASAP. So the problem I hear all the time is, should you buy real estate? Should you wait to buy real estate right now? Raul, the market's crazy. There's index fund things going crazy. The stock market, Tesla. What about Tesla? What about NFTs? That's all fine and dandy. But as you're going to see in this video, there's going to be a ton of facts showing the real estate's going up. There are all types of talk about the market going down. Forbearances, foreclosures, people not paying their mortgages, COVID, all these types of things. But actually, a lot of that stuff does not even matter. There's only two factors that actually really matter. I speak with this from a little bit of experience, a little bit of pain. When I got into real estate and I first started buying rentals in 2013, I scraped up just enough money to buy my first rental. After that, I bought a few more rentals. I found a partner that was looking to do some deals with me. And the reason I tell you this is that in 2017, 2018, people were telling me it's the height of the market. It can't go up any higher. Sell. It can't go up any higher. We're gonna hit a low. Things are gonna go down. So I sold a bunch of properties, and although I made probably right around $300,000 in those sales, if I would have kept them today, I probably would have an extra $300,000 in just that small portfolio that I had. I don't want you to make that same mistake. I want you to listen up here, and I'm gonna share with you. If it's not forbearance, Raul, and it's not foreclosures, and it's not evictions, and it's not COVID, then what are the factors that are showing me that the real estate market is not going down, it's only gonna rise up? What is it? And it's broken down to two very simple things. Number one is the current home pricing trends, and number two is the interest rates and the 10-year Treasury bonds. So interest rates are the largest thing that can affect home pricing. If the Fed raises interest rates a ton, then it can affect the home prices, right? If the current rate right now is about 3.1, 3.2%, and it goes up to 4.5 or 5%, then that could actually bring down the home prices quite a bit, because it'll affect the payments of homes, and people will be less, homes will be less affordable on the payments. Now, if you look at my screen here, let's check out the current home pricing trends. So I use redfin.com. They're a pretty reliable source. So as you can see here, 378,000 is the median sales price, which has gone up 13.2% year over year. I selected here a 3-year one. You can see 2019, 2020, 2021. Look at this spike. What's interesting here though, you see here 608,000 sold, national average. What's interesting here though is you'll see how this goes down. You see how this goes down at this time of year? It's pretty common. You can see it here as well. But if you can see here, there's like a little uptick right here in October 2021. You could see that there's like a little uptick. It's going right back up. Okay, so just on this alone, you could see that there's prices are going up, number of sales are going down, which means inventory's going down, which means demand goes up. So as you can see here, housing supply, there's 834, this minus 24%. So it's 24% less than year over year. Okay, that's out of control. Okay, 12.7, 598. You could see this 1.4 months of supply, pretty freaking low. Should be closer to 3. So as you can see, supply is going down, and then look, so you got a tick going down on the supply, and then you got a tick going up on the demand, right? On the actual purchases, which means there's an imbalance. When there's an imbalance, that means that there's money to be made, or that means that the prices aren't going to go down. Here's some of the top 10 metros. Really, this was just to show you, you see the housing demand, 45%. All this was to show you is that houses are still trending upwards. If you can see 5 years, same thing. 1 year kind of shows like a little straight line. So that's why I chose the 3 years, because you could really see the little uptick there at the end. This is one illustration that housing prices are going up. Next, we talk about the 10-year Treasury Bond. Raul, why the 10-year Treasury Bond? What does that have to do with me? What does that have to do with anything? Well, if you're looking to buy a house and get a mortgage, maybe put 5% down, 10% down, whatever the case may be, you're gonna need to get a mortgage. And banks that do the mortgages, they look at 10-year Treasury bonds to be able to predict what their mortgage rates will be, or they use it to influence their rates. And so based on what the 10-year Treasury bond is doing, we can see as consumers what might happen to the rates. Let's actually go back into my screen here. What's the current mortgage rate? Let's see what it is. Is it 3.49? No, let's see. Current mortgage rate, Homes America. Let's see what it is here. Lending tree, 3.53. Okay, 52.5. Okay, cool. So interesting to know. Now, I also Googled, so why do banks care about 10-year treasury yields? Okay. It's phytoeconomic benchmark. It influences many other interest rates. Rising yields may signal to investors. Why do you take a 10-year treasury benchmark against mortgage? Because they're backed by U.S. government, treasuries. So basically, it's really important. It's funny because there's a 30-year treasury, but they use a 10-year because it seems like it's more tangible and it's more followable, okay? And it kind of shows like a better indication of the market. I'm not a finance expert, but based on reading, that's kind of what it seems. What is the 10-year treasury doing? So let's check it out. 10-year treasury yield chart. Let's look to see. Okay, so bottom line here is if the 10-year treasury goes up, interest rates go up. 10-year treasury is going down, interest rates go down. So let's see what's happening. Okay, so we are in, let's go down a little bit more to here. Let me organize myself here. There's a lot of little numbers. Let's go 10-year, 0.93, you see it kind of creeps back down here. And 1.3, so it was at 1.5, 1.4, 1.4. These are changing daily. But as you can see, it's pretty much staying the same or creeping a little down. 1.6, 1.6, 1.6, 1.7. And then down here, it's going to 1.3. Therefore, it's actually trending downward, which means that interest rates are probably changing downwards, which means eventually there'll probably be a negative inflation and negative interest rates, which if that confuses you, just look it up, but it's not good, okay? But it could be good if you're gonna buy a house. And so I did mention to you the what does the $17,500 that you can invest do for you? That is, if you just put 5% down on a $350,000 house, it's about that $17,500. And you can get a piece on the action, right? The median house is about 360, as we saw, 378, sorry. So if you put 5% down, that's about $17,000 to $20,000. You can get in on the action, get these low interest rates. What this means for you is that interest rates might be lower next year than they are today, which is mind-blowing. So that means do not wait to get in the game. If you can get a house under median sales price, put 5% down, and it makes cash flow if you rent it or you live in it, and it's a nice house in a good area, green light, go get it. Go get it. Things are looking up for the real estate market, and hopefully this video can make you some money so that you can actually go and buy your next investment property. Another last thing that comes full circle with all these trends is that if you don't smash that like button, you probably will never buy your first house. So if you like this video and found value, hit that like button, comment, subscribe, and I look at the comments and I'm looking forward to seeing you on the next video. Peace.